Hello everyone, today is November 30th, so that means it's time for the monthly recap of my Roth IRA. I go through my brokerage, which is Robinhood, and you can see the value has jumped substantially. We're at $16,208 and some change, and last month we were at about 15,200, so it's a $1,000 differential there. If you take into account that I put in about 160 a month, you could say it went up about $800, which is substantial at the amount that I have in this account. And it's very interesting considering I've had some skeptical points of view with the market being so high. And I think a lot of things are overvalued right now, not just in the stock market, but commodity markets in general. So it is interesting to see that it's gone up such a substantial amount in the last month. But that just means there's more things to talk about. When I see all these valuations racing up and more, it just means more news is going to come out. I think there's going to be more shock value coming to the forefront, and the public's going to have to kind of adjust to that a little bit. But that doesn't necessarily mean a correction is in play or a crash of any sort. I don't know. I think growth might be slowing down a little bit, but we will see. Next month we could be at 18,000 or down to 10,000. You never know. But an interesting fact I wanted to point out on Robinhood is that they actually introduced the live time frame to the retirement accounts. I know they have this in crypto, I believe in their standard investing accounts as well, but this just shows you the price movement in the last hour, which is very interesting. Markets are closed right now, so if I hit it, nothing's going to show up. Portfolio is just completely gone. Look at that. But it will be interesting to see and very helpful. It's something I wanted before, and I never understood why they didn't have it in the retirement. It's just very nice to look at for crypto. You can see a lot of price fluctuations and just get more of an idea of how the momentum is going in the market at that time. About time they added it, in my opinion. So that's good to see. If you look at some of our time frames, though, last day we went up $123. That's 0.76%. So we ended on a strong day. That was good. Definitely brought that portfolio value up above the 16,000 mark. Look at the last week, we saw a lot of up and downs, and this is kind of what we experienced in that last week of the month. Before this, we saw a lot of improvement and kind of recovery from the pullbacks last month. But it wasn't anything crazy this last week. We saw some, high points, slightly higher than where we're at right now. We saw some low points. We almost touched $16,000 again, but it kind of steadied itself at that 0.41% gain for the week. Now, if we look at last month, this is kind of what tells a story of what we just dealt with over this last month. We saw that we were down, and this takes into account our contribution. So it says 15,475. Bring that back to 15,200, especially the day before it was even down a little more. We saw the values race up in that second week of November coming into here and got us to the point that we're at now, slightly higher actually. And then we saw pullbacks at the end of that second week, bringing it down to 15,750 range. And then slowly over time for the rest of the month, it just kind of wiggled its way up. Some days we're up, some days we're down. That's kind of what you hope to see in the market, where you're getting kind of that balancing act and not just straight racing up or straight flying down. So I did enjoy the end of the month. It felt really smooth and digestible. I enjoyed that. So going into 3 months here, up 1,080. So going beyond that, that last month we still had $350 worth of gains there. 3 months ago, with our current contribution percentage change, keep in mind we're at $15,100, and now we're at $16,208, which is $1,000 difference just in pure gains. You can view it in terms of accumulating our contributions into the calculation of our balance of our account. Year to date, up 14.29%. That's disingenuous considering the fact that we transferred over. We can look here. Seems like in the middle of May is when we transferred our account in. So S&P is up, I think 20 something percent. We can look at that definitely. So that's the number I just used for year to date. You could value my QQQM and VOO together. That's where we find year to date. In the future, this will be more reliable and realistic to look at, but it is still interesting to see how much we've changed since we transferred over to Robinhood. I did want to point out our contributions down here. We're at $1,551 contributed since I came over. I did have contributions before that time period as well. And the IRA match has given $46. So that $5 a month fee I'm paying for Robinhood Gold, really don't have to worry about it. And that doesn't take into consideration the fact I'm able to get a couple extra dollars into the Roth IRA account that can grow in value. So it doesn't even show the true value of your 3% match. I mean, that'd be an interesting feature if they could add, hey, that money, that this additional money you put in has gained about this amount. This is the value of what you got from Robinhood Gold. That would be interesting to see. Very hard to calculate, so I don't expect to see it. But keep that in mind that that 3% you're getting into your account does more than just give you I don't know, $210 a year. It gives you $210 additional dollars a year in your account that might already be maxed out. And then at that point, it has room to grow. Money that is growing that would not have been there in the first place. So it's something that is, I think, slightly overlooked, but it's great to take into account just to understand that, hey, you're actually getting fair value out of Robinhood Gold, even if they do price increases, which I think they will, $7, $7.50 a month. I still think it's a fair value proposition. And that's kind of one of the main reasons I transferred over to Robinhood, and considering the fact they covered my transfer. So let's look at our equities here. We have QQQM compared to QQQ just because it has a lower expense ratio. I'm not trading options or day trading. Not concerned about liquidity. So we'll just go QQQM for now. We got 48.44 shares. That is $10,153.69. Nice. We got a VOO, which is 10.93 shares, which comes at $6,054 flat. So considerable positions, and we will look at that because I did update my spreadsheet a little bit. However, there's a couple things I wanted to talk about before we get into more of the technicals. You can see at this top we have Robinhood Legend, so that was newly released by Robinhood. Great to see. Get this nice little noise when you load up the app. And I messed around with this a little bit. I think it's more catered towards day traders and that kind of aspect of investors, but it's still a really nice platform to look at. I mean, a lot of analysis features you can add to this. You see I have a moving average in there, so that's very cool to see. I just got Microsoft pulled up. But you can easily change this to any stock that comes to your mind. I mean, we can look at Master, which is, or MSTR, I think it stands for Master. But this is a company that has just been flying up. See it on Wall Street Bets. The degenerates are just running crazy with it. So I just wanted to pull up their chart. Yeah, I think this company is incredibly overvalued, mainly because I don't know, it seems like people are just kind of trying to pump it. There's not really much going on to it. I think it's like a tech-based stock. I don't know. Honestly, I haven't looked too much into it, but I thought it was just an interesting stock to pull up. Great use of the Robinhood Legend UI just to see how it kind of looks. You got functions in here. We can add a bunch of indicators. They got all sort of technical analysis, which I don't really look into. You can change how the chart looks. If you wanted candles, I prefer the line graph. You can do bars. You got a bunch of different stuff. You can have the area below it if you like to have it filled in. A lot of analysis you can just do with this. You can draw lines on it. You can draw shapes if you want to look at Jupiter ascending and see what if Jupiter is in retrograde for the month to see how your stock's performing. So, no, great stuff to see. I mean, you can go back through time, scroll through it. I mean, go closer in time frame, and the bars will change that. You can change the bar frequency down here. I don't know. I think, honestly, they did really good with this platform. I mean, yeah, you can see this. I mean, that's 30-minute intervals. It's just really great to see. So, I mean, MSTR, great company just to kind of see originally. Yeah, let's see. Yeah, MicroStrategy, not Master. But yeah, MSTR, MicroStrategy. Another company I found interested in was Palantir. This company has, let's go a little further out on our time frame here. So let's go out a week time frame. This company, I think, is probably overvalued again. It's one of those more degenerate feely stocks. We go on Wall Street Bets, people are pumping it. You know, a bunch of call options. I mean, if you saw the call option volume on this, I'm sure it'd be astronomical. I think puts might be good. Look at it now, but you can see the valuation has just raised itself and raised itself, and we can look at this on the standard Robinhood app too. I mean, it's just incredibly raised up. Its PE ratio is incredibly high. It's has competition out there. I don't see anything special about Palantir necessarily, but I don't know. I guess my sentiment isn't necessarily the shared one in this case. These are stocks I want to do more analysis of, but I figure we can just look at them, kind of get more of a feel of that legend, the legend interface, because I think it is incredibly interesting. A lot of stuff you can do with this. Obviously, I'm not a pro. It's very confusing trying to work your way around it for the first time. Another stock I want to look at here, we got TGT, Target. They missed earnings, and that resulted in a 20% drop in the stock price, which you can see at this point. Looks like it was on April 25th. Immediately after earnings came out, yeah, we're going to drop 20%, and they did miss their EPS mark by about 20%. So, I mean, that's pretty fair. This is one of those situations where I was looking at, hey, you know, that might be a value play. Drop 20% a day, major company, Target, reputable. All those things should raise your eye if you're looking for valuations. And it's not saying it hasn't left my focus, but it did kind of go on pace. I mean, you're expecting a 20%, well, you're expecting EPS in the future, and it falls by 20%. If you're looking at the cash flow model, I mean, it does make sense. It's not like the most nonsensical thing, like when McDonald's had a slight E. coli breakout and stock drops 10%. Well, yeah, I mean, at that rate, you know it's probably going to come back up in a relatively short time. Something like Target, we've seen some pullback on, but you can see recently it's actually kind of stayed at that point. I mean, if you want to look at technical analysis, you got a bit of a break-even point down here. Let's see if we can get some lines. Yeah, right here. Okay. So, yeah, let's just say this seems kind of, we got a lot of pullback right here. Again, I don't really do technical analysis, but you can see a lot of jumps off of this point. So, I mean, it fell down to it. You're kind of bouncing off several times right here. Coming back up, you're bouncing back. Bounce. And I mean, it'll probably bounce back at that point. I don't know. But you can kind of see the stock is finding its settled mean about there at this price, which is 140, it looks like. So I'd expect Target for the short time to keep bouncing back around that 140. I mean, it's at 132 now, so I mean, you get some value out of that if you want, but yeah, I don't know. I don't think it's necessarily a crazy value play, but it is something to look at. And the last one is the bane of my existence recently, and that would be Robinhood. And if you remembered in my last video, I expressed my interest in Robinhood. And let's see if we can get in here. So yeah, sometimes Robinhood Legend platform is a little buggy, but I think they're going to work on it. And I'm also on Mac, so maybe it just doesn't necessarily translate perfectly. But we saw Robinhood go up to $37 and, well, let's see, $23.47 here, drop down to about $18. And this is where last month came into play. You can see this as at the end of July, so it lines up with the last recap. We saw an incredible decrease. I think it was about 20% or so drop in value. I mean, yeah, you went from 23 to 18, yeah, 16, 17% drop in value. I was like, hey, this is pretty attractive. I didn't think they did that bad. I listened to their earnings call, heard everything, all the features they have coming out, rolling on the forefront. I mean, the revenue is increasing, their subscription model is increasing. I was like, hey, this is a great looking stock right now. And just because they missed their EPS right now, I don't think that was a bad thing. And they kind of expressed a big reason they missed their earnings was because they're doing a lot of these promotions to bring people onto their website, like me. I was bringing by their promotions. I think the 3% contribution match is great. They basically covered all my moving expenses from M1 Finance. And that pulled me in, honestly. I mean, you got those features, but you also have that 1% deposit match in the standard investing account. A lot of people are taking advantage of that increased APY, basically, 0.5 because it's over 2 years. They said they're actually going to stop that because, I mean, it costs them a lot of money just to match 1% on any deposit. But I think those are the main reasons that the EPS wasn't quite where it was expected. Because of that, dropped significantly, and I started building a position and said, hey, I believe in this stock long term. I want to kind of keep building up a position. And I said that, and the valuation jumped back up to where it was pre earnings call, pre time it dropped. And I thought that was jumping incredibly fast with seemingly no logic behind that. Maybe people just decided, hey, that valuation wasn't fair. So I sold out of my position. I thought it was a fair time. Listen, sometimes markets just irrational. I would actually say it more than often it's not. Since then, we've gone from $24 to $37, so that's a $13 increase in stock price. Yeah, it hurts a little bit that I sold out that position at that time, but hey, I mean, I walked away with a fairly risk-free gain. I'm not really complaining about that. However, it is a little unfortunate because I would like to have seen more time to be in this stock. I believed it more long term, and now I look at it and it feels overvalued. So it's an interesting thing to see. So moving beyond this, I mean, the Legend platform, I think it's really nice what they're doing. However, I did want to look at more going on than just that. Let's go on to some of our spreadsheet here. So you can see our overall portfolio balance through time, starting in 2021 when I turned 18. Started at $2,200, and we found our way all the way up to $16,200. So $14,000 difference, and a large majority of that is from contributions, but a lot of that also comes from gains. And I don't know, I just love looking at this chart. I mean, we saw a slowed increase, but increase nonetheless recently. And then we just saw, I mean, a great amount of increase in this last month, making that chart look even stronger. So nothing to complain about here, well above our contribution marks. But this is something new that I worked on with the spreadsheet, and something I want to keep improving on, making it look better for one, because it looks alright, but I think it could look a lot better. We got open position, closed position, and some details about our portfolio in here. Just to keep me accountable on all my numbers, and some place I can stick them all and not have to worry about, and try to make it look pleasing, so I'll hopefully stay up on it. We can see our open positions. We only got our two funds here. We got QQQM and VOO. We talked about the equity that they're at, the amount of shares that they're at, the cost basis, and then we also have the profit in here and the percentage change. So, I mean, we've seen some great things so far. I mean, QQQM, $10,000. I mean, $2,094 profit, 20.62% gain. VOO, 22.13% gain. And that doesn't take into account that I'm putting money constantly into them, and I don't always get to experience that gain from the beginning of my position to the end of my position. I like to see those numbers greatly. I mean, $3,433 of profit just based on my current open positions with their average cost. Closed positions we can look at, and this is something that took me some time to go back. I had to manually calculate because I did not want to just write down the cost basis, so I had to calculate it myself. We can see our Robinhood position here. We had an equity of $32 in it, $32.01, which is 0.831 shares. The cost basis was 31.63. So we saw a $5.72 profit from it, which sounds like nothing, but that was 17.88% in 23 days. So you can kind of see where my position was there with selling it when we saw that rapid increase in price valuation. If you're going to annualize it, that's, I mean, 1,300%, not a bad play. If we look at Crowd, which was 2 years ago, well, 2 months ago, the position that we were in, had $23.53 in it, which is about 0.08 shares roughly. Cost basis of $260.67. We got $2.76 of profit from that, which is 11.74%. That was in 18 days, which was a 949% increase in price. And that was after their stock crashed from totally tanking all the Microsoft using computers around the world. And yeah, I mean, big hiccup on their end, but I thought at the same time, it just wasn't quite warranted. They had a pretty good protocol for what happened, they handled the situation appropriately. Lawsuits are kind of getting thrown out on them because, hey, they did everything correctly, and Some companies just kind of want to put a blame on somebody. And the last thing we had was our Harris election contract. Yeah, if you remember, last month I bought Harris election contract saying, hey, yeah, Kamala will probably win the election. If you've seen the news at all, yeah, Kamala didn't win the election. Donald Trump did. And I kind of got out of my position earlier because the odds favored Harris more than when I bought them. So I was able to secure a risk-free profit at that time. And I pulled out of my position. I have 25 contracts. I sold them at, well, I had a cost basis of 41 cents each. So I pulled out a profit of $1.25. That's 10.64% in 4 days. So, I mean, a 10% gain in 4 days. Maybe it seems like I should go big or go home on my investments at this point. But it's just kind of good practice, muscle memory of working on everything. It's just good to see that, hey, I'm not making these crazy, ridiculous calls or pulling out when I do, especially with the Harris one. Otherwise, I would have just lost that $12 I put in entirely. So, yeah, I mean, you have contributions of $11,187. Portfolio values at $16,208. Has a profit of $5,020, which is 44.8% of my contributions. Again, take into account, yeah, I'm continually contributing. That percentage value would be higher if I had $11,187 instead of $2,200 when I started. And then another thing I put here is this pie chart, and this will look a lot more colorful and pretty once I have different positions. However, right now I only have VOO and QQQM, and VOO takes up 37.4%, and QQQM takes up 62.6%, and this is not too far off where I want to be. I want to have a 40-60 percentage split between these two positions. So I've been buying more VOO whenever I have spare money. I think I'll keep doing that until I get where I want to be. And that's just kind of where my risk tolerance is. I'm a little more risk tolerant. I don't mind the large swings in my portfolio, especially because I have a bunch of time still left in the market, 30 to 40 years. So take on the risk. I'll take that increased beta and hopefully get more value out of my investments. However, yeah, I mean, VOO was kind of just gradually going down, especially when my QQQM positions in the past just soared up in value with the recent tech valuations. And the last thing I wanted to look at today was kind of the main point, which is Nvidia. Nvidia is something I just keep talking about. It seems like every single episode that I do here, every single recap, I talk about Nvidia, and we can see why I do that if you look at the Nvidia stock. I mean, everyone knows it. It's been toying with that number one company in the world as terms of market cap. It's been toying with that for a while now. I mean, quite frankly, the growth has just been astronomical. People have loved this stock, said it's next best thing to sliced bread, and it might be, but I've always had reservations about the valuation of it. I mean, at $138 per share, adjusted for the 10-1 stock split they had a couple months ago, I just think it's a little too high, and that's kind of the position I've maintained. So I kind of want to give a little bit of analysis to that belief of mine. So I made a little bit of a spreadsheet over here, and I pulled some of their financial statements from their cash flow. And I mean, you got all the values up here, but I mean, you kind of look at that without anything in mind. It's going to be just a bunch of numbers on your screen, a little confusing. So I had an adjusted chart down here, which bases all the numbers off of 2020 and the percentage change in those values. So we got sales revenue, COGS stands for cost of goods sold, net income, SGA, which is just administration costs basically, R&D, research and development, EPS, earnings per share, stock price, and then I had an EPS fair value thing, which I'll explain. But let's just get into some of these numbers first. So all these percentage changes are based off of 2020. I did that because I didn't want to just go back to 2019 or 2018. I thought 2020, if you look back at the stock value, I mean, at this time, this is pretty low volatility, pretty steady increase, not on a lot of people's radar, not a lot of concern for being overvalued or falling victim to high variation in the value. So I figured, hey, we can pull back some pricing indication from the end of 2020, which was $13.06, and that's probably a fair estimation of the fair value of the stock. Again, I mean, I think definitely variation within that estimation, but not a horrible one to use. Yeah, so going from 2020, you see sales went up 52.75%, and 61.33% the next year, went up 0.22%, and then up 125.88% in the most recent year. So this is year over year percentage change. So all these are multiplied on top of each other. So yeah, I mean, sales revenue, that's no secret of Nvidia. It's been flying off the charts. And that's a big reason for the stock valuation is because, hey, they got numbers to put behind it. They're not a company that's bleeding money, which is going to take over market cap and then eventually one day be profitable. They're taking over market cap. They have taken over market cap, are extremely profitable, have high profit margins, and have an economic moat that they keep exercising with their technology. And they're looking to get into more things, more parts of that tech sector. So they got money where the mouth is. They're not just saying all these things, saying they're a great company without having the financials to prove it. They have the financials. Boom, here they are. I mean, they can back up what they've been saying, and that's never been my concern of it. But let's take into account some other factors here. You have cost of goods sold. So this is it's the cost of goods sold, obviously, but it's what they're selling, the price that it's increasing of what they're selling. So I mean, you can have sales and revenue jump, but if your cost is jumping appropriately, then are you really gaining that much more profit? Okay. So I mean, cost of goods. So we saw increase sales and revenue 52%, but cost of goods sold followed that. Sales and revenue outpaced that in 2022. And then I think 2023 was a big mishap. And this was a year that a lot of people could have got valuation out of Nvidia, but didn't. And maybe that's because they saw an increase in the stock valuation, which is a fair point, a fair consideration. But 2022, 2023, going into that, that's where we would have saw a lot of that value play coming out of Nvidia. And that's where we saw a lot of people made money on it, especially the employees. And then the most recent year, we saw 125.88% increase in sales revenue. And then cost of goods sold only went up 43%. So their margins increased incredibly there. But something that more encapsulates that is the net income, how much they're actually taking home after the products they're selling and all the associated expenses with that sale procedure. So from 2020 to 2021, 54%, next year 125%, 2023 minus 55%. And this is where I found very interesting look at their financials. I didn't expect a number like this, quite frankly. I don't think it's really talked about in the news. I tried to look up what happened in this year, and I couldn't for the life of me find it. So I had to look in their cash flow statement and their balance sheet, and kind of what I got from it, which is why we have these two columns here, was that the SGA and R&D were higher. So the administrative costs comes up. I mean, we saw 48.59%, 28.55%, 31.63%. That's administrative cost that's going to continue adding, which makes sense. As you have a growing company, you're going to have to hire more people. But also we have the research and development, 38.52%, 34.44%, 39.28%. And now the SGA and R&D both dropped in terms of their increase in that following year, which I think reflected on the net income. However, the SGA and R&D were just very large in the year 2023, decreasing their net income substantially. And I think it was very smart on Nvidia's end. It leveraged them for a great position. They knew what they were doing, that they're on the cutting edge of some great technology. So they put a lot of money in 2023, and that came out on the good end in 2024. So now where I kind of put a little bit of evaluation on this stock is in EPS and stock price. I mean, I could have done a cash flow statement and just future cash flow statement and try to evaluate off that. Quite frankly, I just didn't have the time. So I did kind of the cheap man's way out, did EPS. We can see how much their earnings per share, which is a good metric of the value that an investor is actually getting out of the stock, out of the company. We saw an increase of 54%, 123%, that decrease in 55%, which was appropriate because we saw that net income decrease 55%, and then that increase in 600% in the most recent year. So we can also follow this up with how stock price changed and kind of look at those two things. So we saw 125% increase in the stock price in 2021, and that was followed with a 54% increase in EPS. So, I mean, almost double that, which I think is incredibly fast. And then we had a 123% gain in EPS and a 50% decrease in stock price. So I don't know if the historical data was wrong on this one. We can look at 2022 for sure. But I mean, looking at the end of 2022, it was at $14.61. So yeah, we have that up here. I'm not quite sure why it decreased so much. Yeah, but I mean, the numbers seem correct. So I don't know what really happened in 2022, but sentiment on Nvidia just decreased drastically. And I think that's where a lot of that value play came in for 2023, where you saw that, I mean, the stock value was just incredibly low. And then at the end of 2023, shot into 49.52, which is a 239% increase in stock valuation. So, I mean, you could have spotted this value play at the end of 2022, beginning of 2023 here by these two numbers alone. You get a 123% increase in earnings per share and a minus 50% in the stock price. Those are two things that, although, I mean, not directly correlated, if you're seeing an increase in EPS like that, I don't know, at least see like half a percent increase in stock price maybe. And that's just off the top of my head. But the point is that if you're doubling your earnings per share for investors, why is your stock price decreasing in half? It's just something that didn't quite make sense to me when I was looking at these statements. So I don't know what overall sentiment was saying at this time, but I don't think it was appropriate. I think a lot of people missed out on chances just because of this. And then, I mean, yeah, we know how it ended for the last 2 years, 239% increase and 173% increase. So just astronomical evaluations. And some of this was definitely playing catch up from, I think, investors learning their mistake of 2022. But at the same time, I mean, they had the numbers to back it up for those 2 years. So if we're just basing, say the fair value is based off 2020, and we wanted to follow the EPS percentage change to find a valuation for the stock, we could see we start assuming 2020 is a fair value at $13, and then just apply the appropriate percentage changes in EPS each year. 2021, it would have been $20.18. It was actually $29.41, so a fair value there. And the EPS was said that for 2022, it should have been at $45, but you're at 14. So I mean, very different valuations, which you could have took advantage of at that time. But then that next year, where you had a minus 55% EPS, stock price should have followed up around $20. If you're basing that true valuation, and you're at 2.5 times that, which is 50. So either this evaluation method is just completely wrong, which I think it has some merit at least, or that the market was irrational from 2022 to 2023, which is probably the more likely situation, especially when it comes to Nvidia. So I think a lot of people saw that increased gain in price and just kind of ran with it in 2023, and then it caught up in 2024, where we saw the fair value should be about, based on EPS, the fair value should be about $141, and the price from when I took this was $135. So, I mean, it seemed pretty much around that fair value point if you're following it based on EPS. So I think that way of looking at it has some merit to it, especially if you don't have the time to go through cash flows and the, like, projected cash flows, which I just don't. I used a cash flow calculator. And for this one, we had assuming growth went at 20% for the next 10 years, and then the following 10 years had a growth rate of 4%, which is slow. That it said the fair value is $109.51. And this is kind of where I get a little concerned about the stock price. So, I mean, I showed that its fair value based on the EPS is about 141, but that's considering their EPS doesn't drop in the near future, which I think has a high chance of happening, a very high chance, just because the fact that, hey, they did crush in 2024, but if you look at that, it's because all the capital investments that these large tech companies put into AI. Do you think that Apple, Microsoft, Facebook, Meta, are going to all put those same investments every single year when they're seeing pullbacks in their stock valuation from putting those investments and people not seeing that immediate impact of revenue and baseline profit net income, I just don't think it's likely, quite frankly. So I think the EPS, earnings per share, is going to probably fall in the next year or two. I don't know, maybe I'll eat my words on that. Maybe they'll just exponentially increase forever. But this valuation here is very aggressive, considering 10 years of 20% growth rate. I don't think that could, I just don't think it's likely. You know, if you want to say 10% for the next 2 years or 20% for next year and then taper off a little bit, okay, you can make a case for that. But I just don't think that's going to happen. So, I mean, look at these numbers. They're saying it's overvalued. And I mean, I still think it's a little aggressive on the growth. Take it as you will, but I still think Nvidia is overvalued. I just don't quite see the merit in it. Then again, the stock market can stay rational much longer than you can stay solvent, especially me with my $16,000 portfolio. I don't think I can weather out the storm of Nvidia that long. So, with that in mind, that's about the November recap. Some exciting stuff happened. I think we're in a great position for the end of the year. December typically goes well in the market, so hopefully next month will be a little higher. If not, it's whatever. Yeah, if it drops a bunch, maybe we'll do a great buy or something like that. Put some money to the side always for that. But nonetheless, thank you for tuning in. Make sure to like, subscribe to the video, share with friends. Tune in next month. I hope to have some additional videos sprinkled in between months later on. But for now, we'll just keep going over this portfolio and see the mistakes I make, the great things I do on the very rare occasion, and everything that comes in between. So thank you and take care.